a scary perspective. We're going to talk about debt, understanding debt, and essentially how to manage your debt. It's a conversations that I normally love because indeed every other person, whether you run a business as an individual or any other person thinking about investments, then the question of debt becomes really integral in understanding where you are. All right, joining us this morning then to talk about this particular subject is Dr. Clara Asuba, Clear Edge Investments. Dr. Clara, how are you doing?
I'm very well. I'm fine this morning.
Happy to have you around.
Thank you very much for having me.
Here's what I talk about when it comes to debt.
Yes.
From a personal level, it's a good thing that we start from there.
Yeah.
They say that debt is not bad. That you're gonna understand what is bad debt and good debt, either from a personal perspective or a business perspective. Let's begin from there. What is good debt? What is bad debt?
Literally, debt is something under the current economic conditions,
Yes.
is something you can actually say is bad. But in a way to make debt look like something nice, we have come up as financial advisors, economists, with good debt and bad debt. But debt is debt because you owe someone. Now, when we're talking about good debt, is debt that you can manage to pay on time within the schedules and you have enough income to pay.
Yes.
Bad debt is debt that now weighs you down. You're not able to pay it on time. You don't have the finances. It stresses you. Now, that is what I would call bad debt. But there is no good and bad debt. Debt is debt. You owe someone, you owe something.
That's it.
That's the bottom line.
So debt is debt.
Yes.
There's nothing like good debt. Or...
There's no good debt.
I like the way you started.
Yes.
Is there sustainable debt then?
Yes, there is sustainable debt.
Yes.
And sustainable debt is debt that you have you have the ability to run with it over a period of time.
Yes.
Yeah. If you're able to say run your business on debt, or if you're in importations, for instance, you're taking invoice discounting from maybe a bank and you're able to pay it off and build your life, that is sustainable. But if you're not able to do it and manage it,
Yes.
then that is not sustainable.
That's not sustainable.
Yes.
Guess what they say? Let's start with this statement.
Yes.
So obviously whether it's true or false.
Yes.
And that's exactly what majority of people get introduced to debt.
Yes.
They say that indeed, for any person who wants to grow,
Yes.
for any business that wants to grow,
Yes.
then debt has to be a conversation that you need to have. Is it true that if I want to grow, if a business wants to grow and expand, then you have to come to terms with the question of debt?
That is a lie, because you don't need debt to start a business. You don't need debt to run a business.
Yes.
Yeah, business is about your understanding and you meeting the need that is in society. And meeting a need does not necessarily mean you need resources and finances. Take, for instance, if you want to supply, say, coffee, it's easy for you to go to a coffee farmer, a coffee producer, talk to them, ask them to give you the product, write a contract, and talk to the buyer. Tell them that once I deliver, you should pay me so that I pay the person that is supplying to me. In that manner, now, you don't need to borrow in order for you to acquire the product that you're going to sell to the consumer.
Yes.
You get? So anytime someone comes to tell you that you need debt for you to start a business, for you to run your business, that is a misconception.
Yes.
Yes, you should run your business as much as possible away from debt.
Does it?
Because it keeps you afloat.
Yes.
In spite of the economic conditions and harsh conditions of our financial status.
Are you gonna be fighting with people who say this? That tell me any business that you know that is big. Tell me any company that you know that is big in the whole world. Even the top 20 of businesses that have been covered in Forbes. Tell me any business that essentially did not incur debt in their growth strategy. Because I'm saying this because you have a financial analyst or coaches will tell you that yes, you need to incur debt if you essentially need to grow.
I will be fighting with them Because you see, for that top 40 Forbes company
Yes.
to be in debt, you need to understand their background. For example, they don't take debt because they need it. They take debt because it gives them advantage.
I see that.
Yes. So there are companies, the big companies use debt for tax advantages, for market entry advantages, for many other advantages. In fact, for some of them, debt is a CSR. But for you, you're not doing any CSR. You're not entering a new market, you're not waiving any tax, you're borrowing, and even what you're borrowing is going to be taxed. So when you don't understand the essence of debt, you may say, every company, every large company has debt, so I must also have debt. But your debt is not an advantage. It is a disadvantage to you because it makes you pay more interest and more taxes,
Yes.
simply because you have it in your system.
That's it.
Yes.
As a business journalist, it's the very first time I've met a financial analyst who's
Yes.
saying, well, that debt is not necessarily a good thing.
Yes.
Let me then go to where the conversation begins from this morning in terms of where we are talking about today. And if you look at essentially conversations around the debt and the debt management strategies, we're going to talk about areas in which now, for those of you who are already in debt, then how do you therefore begin to manage this debt? And that's why I want then Dr. Clara to come in at this particular time and start talking to us about, now, good, you've taken debt.
Yes.
Effective debt management strategies. Let's begin with a business. You've taken debt.
Yes.
Maybe they never met you
Yeah.
to look at their businesses
Yeah.
and say, well, do not go into debt. The different ways in which you can actually start to grow your business. You're in debt and you want to manage this debt.
Yes.
Are there effective strategies for a small business first
Yes.
that they're going to use today to start saying that we are managing our debt effectively?
Now, I'll take you back. Sometimes debt is not something that you take intentionally. Take, for instance, you may be a partner with someone in a company,
Yes.
and the person decides to withdraw and demand that you pay back their shares in cash instantly. Otherwise, the company is collapsing. So what you do, you will be forced to take debt to pay him off just to keep the company afloat and running. Now, in that instance, it was not your desire to take the debt. You see? So there are circumstances that make people get into debt. It's not like everybody gets into debt because they want to. And that is why there are measures that help you manage the debt
Yes.
and how to get out of
That's
those debts. Now, the most important thing that I've realized about the different people I've worked with in their journey of debt, it is very hard for someone who is in debt to actually sit down and put down the amount of debt that they owe. Because you see, debt is almost like a kind of enslavement. You don't want to really think about what you owe people. You don't want to really think about how much it is, but you want to keep paying and moving forward. And most of what happens is that you borrow more to cover up for what is already accumulated.
Yes.
So the first step is for you to have a meeting with yourself and sit down and outline every debt that you have and the interest that is upon that debt. And number 3, the amount of time you think you can be able to complete the payment of each debt.
Yes.
That's the first step.
That's the first one, isn't it?
Yes.
But there's a particular question here that I want you to also talk about. And I got this particular question. And as a business journalist, I also run into those conversations every time we're talking about debt.
Yes.
There's now a new strategy in debt management,
Yes.
which is essentially called debt consolidation. Dr. Clara, here's the thing.
Yes.
You might have, as an individual,
Yes.
picked debt in different places as
Yes.
you're trying then to run away from this debt question
Yes.
and due debt.
Yes.
And then you find at one particular point you have debt from maybe 6 creditors.
Yes.
And then the analyst was saying,
Yes.
you see, paying this debt at different interest rates to each of the people that you owe is not a good business decision. So what you do, get your debt bought by one person, then pay this one person. What do you stand?
Now, consolidation of debt does not necessarily mean you've reduced the debt, and also it does not mean that you're paying less interest. You see, when you're talking about debt, it has to be on a case-to-case basis.
Yes.
I, as a consultant, for one, if I'm analyzing a case of someone who has debt, I would like to know each debt, each item, if it was a mortgage, a car, loan, and maybe you have other maybe education loans. I'd like to see each debt that you're carrying. How much interest are you paying on each debt? What is the balance and what is the period? Because ideally, sometimes consolidating actually increases the amount that you're going to pay in the long run. Yes, you will have one debt, but it becomes more expensive than, say, you decide, let me finish the education loan first, or the debt on education. The interest may be at 28%, and it's only 200,000. So eliminate the 28% one first. Then move to the next one, which is probably at 17%. Mortgages mainly go between 12 to 14%. And that is something you can always negotiate and carry over a long period of time. So the component of how long is your debt entitled to you to pay, and number two, the interest rate on the debt and the quantity of the debt determine how you pay. Consolidating might actually bring you into a situation where all the debt becomes a normal debt and you have to pay it at around 18 to 21%.
Yes.
Now, 21% for 5 years is not equivalent to paying, say, the 200,000 in 6 months. You eliminate 28%, calm down, pay maybe the one for the car is in maybe 2 years, the balance is in 2 years, you pay it at 18%, then you remain with only one debt that is at 12% because it's a mortgage. So you see, cumulatively, you'll have paid less interest than when you consolidate and pay all of them at 21, 22% for
Yes.
a period of 6-5 years. Yes.
Pretty much. Other areas that I really want us to talk about this morning
Yes.
as well is that the people you like to say in the conversation
Yes.
of debt and debt management, I, as Clara, would advise you to declare bankruptcy. When it gets to that level,
Yes.
Dr. Clara,
Yes.
and the people say, well, it's going to be a bit good for you if you go that direction.
Yes.
We think so. As your financial advisor or analyst, who is this person you would advise to declare bankruptcy? Who's this business that you're going to look at their books and say, hey, unsurmountable, could you please declare bankruptcy?
You declare bankruptcy, especially if the debt that you carry is affecting people who are not involved in the debt. Now, bankruptcy helps your family. This is from a business perspective.
Does it?
It helps your family, it helps other parties in your organization
Yes.
who may not necessarily need to go through the problem. Because when you declare bankruptcy, it simply means everything that is on your name is supposed to be picked. Anything, your vehicle, if it's under your name, it should be used to pay for the debt. Everything. But now you declare bankruptcy just to make sure that let everything that is on me, Dr. Clara, be used to pay the debt, and the remainder of the debt should not affect the condition of my family members. For instance, your wife may be running a different business. She may be having a vehicle. If you don't declare bankruptcy, the association between you and your wife may create a problem. Now, when you declare bankruptcy, it simply means now the debt that you owe is no longer something that you're being forced to pay. You get? It gives you a breather in a way, and it gives you time now to maybe rebuild yourself or ask for different ways to manage the debt. And then someone else can come in and buy the company, buy the debt, and then you're scot-free when you declare bankruptcy. But if you do not declare bankruptcy, it is between you and the lender. Whatever he demands, if it's 200 million that you need to pay, you will go and sell your house, sell off even your close all your children's insurance policies just to pay off the debt. But when you get to a point and you feel like, my family members, I need to just create a good landing for the people who matter to me, the best thing is you declare bankruptcy, let them sell what they have to sell, and even the company can be sold together with its assets to settle your debt. And that way you have helped in a way, yes.
Debt as an asset.
Yes.
So one of those conversations the majority of people and businesses do not really understand. When somebody approaches you, Dr. Clara, and says that, I want to use my debt as an asset. What are those instances? I know you're not pro-debt. What are those instances when you're going to say, oh yeah, let's take debt. There's going to be an asset for you? There's a kind of business that could actually say they're using debt as an asset. I don't advocate for debt. If you can do it cash, if you can build yourself and go cash, it is the best thing that you can do for yourself. But for instance, in supplies or importations, where there's documentation and you're borrowing, say from a bank, you're given letters of credit, you do invoice discounting, meaning it is not your money. The moment you supply the goods, say you're supplying to a motor dealer or something, you're importing parts, you get the invoice discounting, import the items, the bank pays, you deliver the items, the client pays to the bank takes their debt, and you remain with your the interest or the profit that you have made. That, I would say, is the only scenario in which I would say, yeah, now that debt as an asset could work. You have borrowed, it has helped you make profit, which is going to help your life. Now, that is what I call debt as an asset. But as long as the debt has a tendency to be affected by inflation, it has a tendency to be affected by, say, a problem in your business. Yes.
If you don't have customers or something happens in your business and the debt will affect you, then at that point, debt has never been an asset at all.
That's it. Yes. Pretty much. Now, let's also handle this particular question. Yes. In investments, you're always told, look at the rate of inflation at that particular time. Anything above inflation is good for you. Fantastic.
Yeah.
Depending on the time, they also promise your return on investment.
Yes.
Good.
Yes.
For those people looking into debt, could be the solution now.
Yes.
You've got a tender, you've got to go get some money. Go in, reap your benefits, get out.
Yes.
Are there numbers in terms of the interest of this debt that you're accruing that are already in the business, where you're told if it's debt, it's gotta be here, cannot be above this percentage? Is there an industry number? The way we know in investments, get anything above inflation, you're fine.
In terms of debt, you see, you cannot control debt and say that this debt, if it's at 18%, it will be okay for me in terms of I'm paying at 18% interest, so it will be okay. Notice, inflation does not move alongside debt.
Yes.
The people who took mortgages 3 years ago at, say, 13%, when inflation rises, the debt interest also rises. It's automatic. So the only things that can remain constant is if you're operating in cash, and now, even right now, that's a conversation maybe for another day. The currency in which you're operating now also matters.
It does.
You get? Yeah. When we talk of business and finance, things are very dynamic.
Yes.
So you can't say that the rate at which the debt has been borrowed can be advantageous. When inflation comes into play, inflation goes up, debt goes. Inflation is good, debt works for you. So it is at par. At any one time, it will always affect your business at a constant. No matter the rate at which you borrowed will remain the same. Yes. And you see, when you go, say, to banks, when you borrow, sometimes they'll tell you, we've increased by, or we've not increased, it's still 14%. But look at the fine print. you'll always find the administration costs has increased by an extra 2%.
Does it?
Insurance has increased by an extra 1%.
Does it?
So when you put it together, you are still at 21%, and yet the cost is 14%.
Just 14%.
Yes. So the fine print in everything now tells you that debt, it's not like something you should play around with in terms of it will be advantageous after some time in case inflation goes up. No.
Does it?
Yeah.
Pretty much. Want us to clear like this then?
Yes.
A lot of individuals and businesses were listening to you this morning.
Yes.
In this conversation for debt and debt management,
Yes.
what business should look for clear age investments today? What individual should look for clear age investments today?
Businesses that are in debt and currently you're not able to stay afloat in business,
Yes.
and you need to find a strategy of clearing your debts. And if you're an individual, maybe you've borrowed from apps, you've borrowed here and there, and you need a strategy of getting out of debt, we are able to walk you through because we have strategies. Some debts are negotiable, some debts are, there are different ways we work through those processes. Some debts actually, institutions may refuse to give you more time, but when you get someone to intervene for you, you're able to get certain things in place until you're able to clear your debts. Because as I said earlier, every individual, every organization, your debt situation is unique. You can't get a blanket system of getting out of debt unless we analyze and see this is the kind of debt you have, which are the long-term debts, short-term debts, what interest rates are there, what is the quantity of debt. Once we have a sitting with you and we understand your debt situation, then we can help you start walking out of them one after the other. That's what we'll do for you.
What kind of journey? Take a minute to answer this.
Yes.
What kind of a journey do you work with a small business?
Yes.
Trying to understand how to navigate the debt environment. This has been the criticism.
Yes.
That yes, there are solutions like what you're offering that are clear age investments.
Yes.
But it's a one-stop shop. Come in, get out. What is your unique journey with a small business?
Now, with a small business, one, we help you first of all reactivate your business. As I don't know if I mentioned it, but I'm a business and financial consultant.
Yes.
I have studied both fields. So in terms of business, I have to check your business and know how much can you make out of it and how much can we move into the clearance of your debt.
Yes.
Then number two, you have to give us permission as a business person, because now we make rules because we are working with you and we want to make sure we achieve it. So we will give you conditions. Every week you have to bank this amount to clear your debt, because you see, it's not a one-stop shop. Many consultants do that. You come, we sit, I tell you this and this and this, and then
that's it. That's it.
But at Clear Edge, that's not what we do. We walk with you, you come with your issue, we analyze it, then we go deeper into your business. What do you do? Where are your profits? Because sometimes you're in debt because your business is not even profitable. How can you change? What can you introduce that will give you enough income to help you clear your debt? Because even individuals, the reason why you're in debt as an individual borrowing from apps is because maybe your income is not sufficient to sustain your lifestyle. So we also look at your lifestyle and we give you measures that you, if you agree with us and you put them into play in a short or some time or some span of time, you'll be able to get out of it.
Pretty much. Yes. Dr. Clara Suba, thank you very much for coming by.
Thank you very much.